Hello guys, welcome to my channel. I'm gonna be starting a new series. Well, actually my first videos are gonna be on how to trade. So this first video is about candlesticks, as you can see right here. So I'm gonna teach you what this means, how to read them, and basically some kind of important information about candlesticks. All right. So some of you may wonder what is a candlestick. Some of you may already know it. So let me explain it from scratch. So a candlestick is just another way for reading the market, right? So there may be people that instead of using candlesticks like you're seeing right here, there may be people that use bars, right? This used to be very popular back then before we knew about candlesticks. Then we have other kind of uh, or different ways to see the market. You can see it as a line, just like a line. But usually, when we do technical analysis, and that's how I operate usually with the technical analysis, you can do fundamental analysis or both, as I do. But in this case, if you like to do or you would like to do technical analysis, my recommendation is that you use these candlesticks because usually they gives you good information. Plus that they are clear, they're easy to understand. So yeah, let's start. So usually candlesticks are all of these little lines that you're seeing here, and each of these candlesticks represents a specific time frame, right? So in this case, you can see up here that I'm in 1 hour. That means that this graph that I'm seeing here for Ethereum, every candlestick represents 1 hour, and you can see it down below. It tells me time and it tells me the date, right? So, for example, this last candlestick that we're seeing right now, it's on Tuesday, 11 August of 2026, and it's this candlestick started on the 1400, so 2 p.m., right? And right here, you can see how much time is that candlestick will be still working, right? So as it's 1 hour and it started at 2, this is gonna close at 3 p.m. and it's still 46 minutes remain to 3 p.m. basically, and to close the candlestick, of course. So that's a candlestick in a general remark. Now let's go to the anatomy of a candlestick. So I had some draws that I did right here. So you can see that's how a candlestick looks like, and they have different parts. So depending on their color, some specific parts change. Well, specifically two. So we have uh, four mainly data from a candlestick. We have at what price they open, at what price they close, what was the highest price, and what was the lowest price. That's raw data that we can see in TradingView, for example. If you just put your mouse on any candlestick, you can see up here, look at here, that it's gonna change, and it's gonna tell me O for open, high for highest, L for lowest, and C for close, right? So for example, in this last candlestick, the open was at 1,866. The highest was around here, that it was 100, 1,866, lowest 1,862, and the close uh, that is gonna change because it's still not closing. So for the moment, it's gonna use the current price at the close. That's why the close is constantly changing. So okay, so we know that, and now, so in a red candle, that means that the candle is bearish or the price is going from a highest price to a lowest price. So automatically, TradingView puts the color on that candlestick depending on the open price and the current price. So if that candlestick, let's say this candlestick open here and this candlestick went down, automatically that's gonna be red. So if the current price is lower than the open price, the candlestick is gonna be red, and the other way around. If the candlestick is the current price is highest than the open price, that's green because price is moving up, and in the other case with the red candle, price was moving down. So These colors can be changed in trading view, but usually the standard colors are those, right? Red for bearish or going down, and green for bullish. So in this case, these I'm going to show you will be the open. This itself, all this thing is called the body of the candlestick. But if the candlestick is red, the the highest part of the body it's the open, right? And the lowest part of the body will be the close, open, close. Now, these little lines that you see here, we call them shadows or wicks. What this means is this is the highest price that the candlestick achieve at some point, and this is the lowest price that the candlestick achieve at some point. Because at some point, this candlestick may have looked like this, right? Just red without wicks. But maybe at some point it was like this, but then it was rejected. So rejected means that other participants in the market, let's say the bulls that we call them in crypto, the people that, sorry, the bears that we, it's like the people that wants things to go down, um, they just press this candlestick to go down, because maybe if that was with this candlestick, what we could see is that at some point this candlestick was green and was something like this. Why do I know this? Because just imagine this. So this is the open price. If at some point we had this little wick, that means that at some point this candlestick looked like this, open, and the current price around here. Then sellers started pushing the price down, and when this goes like this, and then it turned red, right? And then this turned completely red because now the current price was lower than the open price, and then it did this, and at some point was like this thing like this. It was like with the wick here. At some point it was with no wick below, but then bulls or people that think that price is going to go up and see the opportunity to buy, they say, okay, buying, and that created price to push a little bit up, and that create the other wick. Okay, so that's how the candlesticks are formed basically. So we have different kind of candlesticks, and they tell us usually they give us different hints of things, right? So usually a candlestick like this is just a straightforward candlestick from direction, right? So the wicks are small and they're just telling us like, okay, the trend, let's say we are in a downtrend, okay, the trend is strong and every candlestick has like a lot of body, so that means a lot of conviction. In this case, this candlestick, you will say it's because it's red, maybe you're gonna say it's bearish and it means the same thing, but no. Having in mind that a wick means that at some point this candlestick goes like this, the fact that now it's like that means that buyers step in and push the price higher than at some point was. So that's not at all bearish. That's quite bullish because that means that at some point, let's say in a resistance point, in a point, buyers said that's a good price to buy, and they push the price higher to the point that they did this candlestick that it's a small body and a whole wick, right? And that's kind of bullish. This is a doji that usually means indecision, so not that clear of a direction, so doesn't the bulls are not that strong, the bears are not that strong, or they're not too sure about what's the direction or what's the next step on the market. So they're just like waiting for some kind of breakout or movement, right? Uh, dojis can look like this or like here or like that. So if the doji looks like this, it's quite similar to this one. So it's kind of bullish. If the doji looks like this, is a little bit of bearish, and like this is like more indecision, but in all cases should be indecision a doji because the body of a doji should be like really small to consider it a doji. But at the same time, we can have this little trick or this little lecture where if the body is a little like here, that means more wick below, that means like buyers step in, despite end up being like a doji, and the other way around. But the basic or the most indecision candlestick will be this one, like just kind of in the middle. Okay. And in the other side, we have the green ones that we have indecision that will mean the same thing. Either if it's green or red, it will mean the same thing. We have the engulfing that is just conviction, a lot of bullish candlesticks, and this one that is the same case than that one, but in the other way. So you will say that this is bullish just because it's green, but it's not, because it means that at some point this candlestick had a lot of body and something similar to this one with a lot of conviction, but sellers step in and they just basically did this to this candlestick and make it kind of bearish. We have some comparisons. So as I told you, candlesticks are just depending on the time frame, right? So I needed to show you, I don't know why this kind of book, 4 hours, I think. I had it in 15 minutes. Mm, no, that's even worse. I think it was, oh no, I think it was right. Yeah, it was in 15 minutes. So we have this comparison. So usually lower time frames creates the higher time frames candlesticks, right? So that means that, for example, a 1 hour candlestick is formed from four 15 minutes candlesticks. So let's say we're looking at in the past example, we were looking at the current candlestick of the 2 p.m. That candlestick is formed for four 15 minutes candlesticks that are 2 p.m. to 2:15, 2:15 to 2:30, 2:30 to 2:45, and 2:45 to 3. So those four candlesticks at the end form this 1 hour, and the 15 minutes itself it's formed for uh, 3 5 minutes or 15 1 minute, etc. Or the biggest higher time frames like the daily is formed for from 24 1 hour, etc., etc. That's how it works. The weekly is formed by 7 daily candlesticks. The monthly depends on the month, but basically between 29 to 31 uh, daily candlestick, right? So that's how it works. So let's take a look at this. So let's say that this is the 2 p.m. Candlestick that we're seeing in 1 hour. And let's say this is the first 15-minute candlestick that was formed at 2 p.m. and goes to 2 p.m. to 2:15, right? So here we have the open of the candlestick that is gonna be the same. Like it doesn't matter, it's gonna be the same for the whole thing because it's just the open price. Then in the 15 minutes, we have that the first candlestick was like a small candlestick, bullish, and had a little way, but that's that's how it ends. Then the 15 minutes, we open just where we close, and then we had like a high, little high that at the end ended up being the highest the 1 hour, and then just completely smashed down at some point and then rejected. But anyway, it's from the lowest of that candlestick that at the end end up being the lowest of the 1 hour, right? So we have now open, high, and lowest. So this candlestick at the end, because the other one weren't able to do highest high or a lowest low, end up creating the low and the high. Look, the low and the high, it's the same of this candlestick, and the open is the same of this candlestick. Then the price started moving up, and it just closed here at 3 p.m., and that ended up being the 3 p.m. close. So that's how these four candlestick in the 15 minutes should look in the 1 hour candlestick. All right, so that's how it works. So now I'm gonna take a look at the chart and show you things, right? So right now we're looking at the 15-minute candlesticks. And look, this current candlestick is very bullish right now. Doesn't even have or should have little to no shadows. Yeah, it looks like it doesn't have shadows, and it's just going crazy up after this little range that we have in the lowest time on the lower time frame of 15 minutes. Now it's forming this little wick. Let me See, look, this candlestick is kind of bearish, but when I say it's kind of bearish, doesn't mean that if you just look for candlesticks like that, you're just gonna completely start printing money because it doesn't work like that. It's not like, okay, so I saw that if I find this kind of solid candlestick is gonna be immediately bullish or bearish. And sometimes it's gonna work like here, it's a full um, candlestick and at the end that move really down, right? Or the other way around. But look at this. This is a full green one and it moves a little bit, but then we just smash down. The same thing here and with the dojis or with the rejection. So take a look at this. Two big green candles and then we have a rejection and that's kind of bearish and then we indeed started moving down a little bit, but sometimes this doesn't have to be the case, right? In this case, it worked as well. Look at this one that was very red candlestick down here and then rejected and then started this move up. But the cases from the other way, right? Where we see a rejection and price doesn't care and they just continue. Let me take a look at that example that I had it around here. Here, for example. So we have these two rejections. So you could say we're completely for sure, but let's say you position yourself like here, you put the stop loss around a little bit up from that, and you were looking for that RR or risk reward of 2, and look at this. You were a little bit of green and then get out. So this doesn't work always because uh, checking on a specific patron or checking on the specific candlestick is not going to work. What is going to work is that when you merge different analysis, the candlesticks with the structure, with some indicators, right? So it will be better if you take a look at the indicators. Um, you go to the higher time frames and you do your analysis. You see the little range. You see the daily, and you can say, okay, the daily, let me take a look at the daily. It's kind of in a range, but it's just like bouncing or testing this MA50. So that's kind of bullish or no. So you're just gonna combine it with different stuff to be able to know or to try to know about a direction so you can position yourself in a position. But don't look for specific candlesticks and immediately position yourself like, oh, uh, this is a week of rejection. I'm just gonna go, sure, okay, this one work, right? Because we have this movement here. But most of the time, you're just gonna lose money because that's not how it works, right? So, okay, so that's what I have to tell you. And in the next few videos, we're gonna see other stuff like structure, microstructure, macrostructure, and other stuff that it will be useful to do your complete analysis. Okay.